High yield savings accounts are really popular right now and they're offering 5% interest rates. But what exactly are they and are they worth it? So, high yield savings accounts is just like a regular savings account, but they offer 10 to 20 times more interest. And the reason why they are able to do that is because they don't have physical branches and they basically pass those savings on to the consumer. One thing to be aware of is just because they have really high interest rates right now, those interest rates can and will change in the future. So you can't depend on the rate being the same. High yield savings accounts also typically have a withdrawal limit. So this could be 6 to 10 withdrawals per month. But if you're using your online savings account correctly, this shouldn't be an issue. Just like a normal bank, your money is going to be liquid and insured up to $250,000 with FDIC insurance. High yield savings accounts are really good for things like emergency funds, or if you're saving up for a wedding or a down payment or a vacation, any place that you want to park your cash for a few months to a few years, a high yield savings account is a great option. Just keep in mind that your high yield savings account is not a replacement for your checking account. You should also have a checking account and a high yield savings account in separate banks. And this is really useful because with your high yield savings account, you'll know exactly how much is in it and you won't accidentally spend it. Your checking account is kind of like your wallet. So this is where all your money first goes into and what you use to pay your bills and your everyday spending. And when your wallet gets full, you want to transfer that money from your wallet to your savings account, which is kind of like your piggy bank. And when your piggy bank gets full, you want to start moving that money from your piggy bank to your retirement account, which is kind of like your vault. So over time, you'll see money flowing from one account to the other. And each dollar here has a specific location with a specific goal. You'll have short term, medium term, and long term. Another mistake you want to avoid is using your high yield savings account as an investment account. 5% might seem really good right now, but historically, the rates are much lower. And with 3% inflation, you might not be earning very much or even losing money. What I do and what Warren Buffett recommends that 99% of other people do as well is consistently buy an S&P 500 low-cost index fund. There's a lot of good banks out there that you can use for high yield savings accounts. There's Ally, Capital One, Goldman Sachs. I use American Express. Any bank that doesn't have any fees or minimum deposit is a good choice. You want to avoid anything that is like a crypto related, trading related, or stock related. You just want to pick a normal bank, and that's the safest bet. There are some high yield savings accounts out there that claim to have really high percentages, like 7% or 10%, and you want to stay away from these. Typically, these rates are only for like the first $1,000 or the first 3 months, and the rate is going to be much lower after that. You can use a website like bankrate.com where you get to compare all the different kinds of banks.